Hi guys, this is Sarah from The Savvy Professor. In today's video, we'll talk about an assumable mortgage. Watch till the end to discover what it is and much more. What is an assumable mortgage? An assumable mortgage is a home loan that can be transferred from the original owner to a buyer. Think of a homeowner paying a mortgage for their home. Some years later, they may want to sell it, but they haven't completed the mortgage payment. An assumable mortgage allows a buyer to step into the homeowner's loan and assume it as their own. Therefore, the buyer will take over the remaining payment in the same payment period, interest rate, and any other conditions of the seller's mortgage. Since the home value will be higher, the buyer will have to pay the seller the difference between the mortgage balance, the outstanding principal with accrued interest, and the current home value. Are all mortgages assumable? No, most conventional mortgages are not assumable. Mortgages backed by the government are assumable, such as the Federal Housing Administration, FHA, United States Department of Agriculture or USDA, and the Department of Veteran Affairs or VA. The mortgage lender must approve the assumable mortgage and release the original homeowner's liability for the debt. What are the benefits and drawbacks of an assumable mortgage? The most notable advantage of an assumable mortgage is that the buyer pays for the mortgage at a lower rate than the current one. The interest on a mortgage in 2009 was lower than in 2022. The seller also has the upper hand from the lower interest rate, so they can negotiate a higher selling price. One of the disadvantages is if the buyer has to take out a second mortgage. It can happen if the buyer doesn't have enough money to cover the difference to pay the seller for the higher home value. Taking out a second loan means a higher interest rate. It undermines the advantage of an assumable mortgage. Two mortgages also increase the risk of default in payments. So, there you have it. An assumable mortgage is a great alternative for buyers to get lower mortgage rates, especially if they don't have to take a second loan. I hope this video was helpful, and if so, feel free to like, share, and leave a comment on the video. Till next time.